Thanks again for all our subscribers, and if you haven't already done so, please remember to hit the subscribe button, the like, and share with any friends or family members you think could use this information. We're on our road to 10,000 subscribers. We're doing a little giveaway, so please remember to type in mortgage in the comments, and we're going to have a giveaway. Big news on the mortgage front. The government has now introduced a new goodie for home buyers, and that is the elimination of the mortgage qualifying rate, also known as the stress test. Folks, this is big news. Now, it only applies for mortgage renewals, but this is a big chunk of the market. You know, we always talk about purchases and that sort of stuff, but the reality is people who have mortgages outnumber those that are buying in any given year. We have a large amount of folks that renew every month, and over the course of a year, we're talking 1 million people plus that are renewing their mortgages. And now they will be on a level playing field with insured mortgages where they do not have to use the stress test to qualify when they want to shop their mortgage at the end of maturity. This is big news because Peter Rutledge, the person who runs OSFI, that's the Office of the Superintendent of Financial Institutions, has always shrugged this request off for years, and now he's caved in. And I believe a lot of this all has to do with liberals wanting to gain favor as an election looms. We saw the addition of the CMHC rules change earlier last week, and now we have this elimination of the stress test on mortgage renewals. We're getting a lot of goodies just as talks of an upcoming election are on the horizon. So what does this mean? Mortgage holders that come up for maturity were really strapped and unable to look at opportunities to shop their mortgage because they had to qualify at not only higher rates, but at that contract rate +2. That's where the stress test kicks in. It really eliminated the opportunity to shop their mortgage with other lenders and try to secure more attractive rates. Those existing lenders who knew these restrictions on these home buyers didn't offer the best rate. And when people cannot shop or are handcuffed in doing so, this prevents a lot of additional costs. And to bear an example, on a $500,000 mortgage that could be shopped and you could save as much as 30 basis points, that's $1,500 in interest savings a year that you're foregoing because you don't have that ability to shop. And over the course of a 5-year term, that's $7,500 of after-tax income that we pay our mortgages with. Unlike Americans who could write off a portion of their mortgages, in Canada, we can't when we're trying to pay our mortgages. We're always paying that mortgage with after-tax income. So it's a double whammy. So this is big news. We're seeing approximately 80,000 to 100,000 people renewing their mortgages every year, and now they got choice. Now they could go after those aggressive rates. We're seeing a tremendous amount of competition from lenders across the board in gaining new business, and now this elimination of the stress test is big news for home borrowers. And with the amount of people that are renewing every year, close to 80,000 to 100,000 every month, this is going to create significant savings for people, and that additional savings in their household budgets is desperately needed as cost of living continues to soar. We are seeing inflation come down a little bit, but it's still elevated from the levels that these people probably bought their homes. So those costs have added up. People are going to be really in good shape with this one. It takes effect November 21st, and it can't come soon enough for folks that could go out there now and shop their mortgages. And this is coupled with the previous changes that were announced, where CMHC increased the cap on high ratio mortgages the government, the finance minister, introduced this lifting of the cap on insured mortgages from $1 million to $1.5 million. And what's funny about this one is that, all the interest groups, real estate, mortgage industry, developers, builders, the construction industry, have all been clamoring to the finance minister and CMHC to increase this cap to 1.25 million from $1 million, and all of a sudden they shocked everybody by increasing it to 1.5. So what the government is saying is the new starter home limit or average home is 1.5 million bucks to a degree. So I'm not a big fan of that cap going to that level. I think it should have been tapered a little bit lower to that 1.25 range. But this is only going to appease a very small market. In order to qualify for that mortgage, you're going to need a household income of about $300,000, and that's a lot of money. Not a lot of first-time home buyers have that type of household income. So what market is this really appealing to? So our industry is expecting more people on title. We're probably now going to see 4 to 6 people on title as family members and parents and guardians help out in the approval process by going on that mortgage to help secure these loans, because they are big. The government also finalized the details as to how much down payment folks are going to need to put down. So the details on that are that the first $500,000 of purchase price, the borrower will need 5% down. Anything above that, up to that $1.5 million cap, or $1.499999, will be a 10% requirement. So if you are buying to the cap, you're going to need to put down about $125,000. Premium on that mortgage, which is a one-time payment and gets added to the mortgage for default insurance, that's what the high ratio insurance is going to be calculated at 4.1%. It's a big number. The borrower pays that by adding that to the mortgage, and that default insurance doesn't cover the borrower, it covers the lender in case of default. So you are paying for an insurance that if you flake on that mortgage, that lender is covered with a payout, and the taxpayer, the high ratio insurance is covered by the government of Canada, up to 100% if it's CMHC insurance, and the other two insurers, Sagen and Canada Guarantee, are covered up to 90%. So taxpayers on the hook, and CMHC has been doling out dividends to the federal government because they are a crown corporation in the billions. They stopped doing that a year or so ago, but they were doling out billions and billions of dividends to the federal government from these premiums. So they were a profitable operation, and rightfully so. The actual change that I really think was most beneficial was the extension of the amortization when they did announce that increased the cap of 25 years to 30 years. I think that was well needed. It allowed some additional relief on cash flow. It would save a borrower about 9% in cash flow, so they could stretch their payments out a little bit longer. You become a debt slave for 5 extra years, but you do have less pressure on your obligation and payment on that mortgage every month. So I think that was well needed. It kind of lines up with the conventional mortgages and the non-high ratio mortgages where they did have 30-year amortization available. And I think that was a good step, that everything aligns perfectly in that regard. But listen, these are great news. These changes are great news for home buyers. I think that this could spur the market, but is that what we really need? I think the problem we had was there weren't enough homes, and these changes have only impacted demand because they will spur activity, and we still have a lack of homes, and affordable homes for that matter, for Canadians to live in. So I think they've addressed the wrong part of the equation here, but maybe there's still more goodies to come. We'll keep an eye on it, and hopefully we'll get more good news in the following weeks or months leading up to an election, because chances are we're going to be getting a lot of gifts in the next little while. So if you enjoyed this video, please subscribe, give me a like, share it with a friend or family, and leave a comment, and enter our draw to hit 10,000 subscribers by typing in mortgage in your comment, and you'll be entered into a giveaway. Thanks again.